Hello and welcome to the Accredited Investors Only podcast presented by Accredited Life. I am your host, Peter Neal. Thank you so much for being with me today. We have a very exciting interview lined up. But before we get into that, let me ask you, are you living your accredited life? Are you living the life that you want to be living? And now, that the end of the year is upon us, this is a great time to be assessing 2024, what worked, what didn't work, why did it work, why didn't it work, and looking forward to the new year, hopefully in a very positive, very excited, and kind of a dreaming of what's to come and all the potential that's ahead of us. So I challenge you to take time now over the next few weeks, during the holidays, maybe when you have some time off from work, to look at the past year, look at, what's worked for you, what hasn't worked for you, why did those things happen the way that they did, and really take time to sit with it. As I always say, don't take things for granted. So take the time to appreciate the accomplishments that you had, and take the time to be honest with yourself over goals that maybe you didn't achieve, that for whatever reason, look at why they didn't happen. And now's a great time to be doing that. And then also take time to look at 2025 and what you want to achieve. Start to write out and to think about some of the goals that you want to achieve in your personal life and with yourself, mentally, physically, with your family and your friends and your business, with your health and your wealth. Set goals on different levels. That's one of the big things that we talk about in Accredited Life is yourself, your health, your wealth. So it's your relationship with God, your relationship with yourself, with your family, with your friends, all that kind of stuff. And then obviously your health and your wealth, these are all important things. So take time to set those goals, to think about what it is you want to achieve. So this time next year, where do you see yourself? What do you want to be saying? I'm really happy this happened. I'm really happy this didn't happen. I wish this would have happened. What are those things that at the end of next year you're going to say, if you didn't achieve them, you're going to say, boy, I really wish I did. And then find out ways to make that happen. Now is a great time to be, kind of closing up on loose ends and things like that. Reaching out to people that you haven't in a long time to say hello, to wish them a Merry Christmas, a Happy New Year, a Happy Holidays. The beginning of the year is always a great time to do that, because now, a lot of people are busy with the holidays and shopping and traveling and things like that. So once some of that craziness settles down, make it a plan, write it down and write the people down and their contact information and reach out, say hello, check in how people are doing. You never know what's going to come from something like that. So this is such an exciting time of the year, a time to really look back and not take things for granted, to be very thankful, and to be very happy about your accomplishments and your achievements, to make a note of those and to celebrate those, and then to look at what did you wish you did achieve, what maybe didn't you, and what can you do in 2025. So without further ado, let's get to our interview. I have a very exciting interview today with a good friend of mine, somebody who's helped me out with different things, from a modeling perspective and all. Val is somebody who is a great example of building a really good foundation and working off of it. So very good at underwriting and due diligence and modeling. So today we're going to interview Val Despard. He is the CEO and founder of Despard Analytics, which is a consulting firm in the commercial real estate space. He works with brokers, investors, asset managers, and developers across the United States with financial modeling, especially Excel and Argus. He does investor reporting, lease abstracts, and equity waterfalls. He has a team of senior analysts, primarily U.S. based, that work remotely from several different locations. So we're going to talk a lot about his background, how he got into the space, some of his past work with Newmark, how he came up in this world, and how he's been able to grow his business. So without further ado, let's get right into that interview.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Val, how you feeling today?
Well, feeling good.
Awesome. Well, welcome to the show. So, for the listener, can you explain who you are, what you do from your own voice?
Val Despard. I started a consulting firm on the side. We really was doing freelance work on the side about 10 years ago. So backing up further, I started out after I got an MBA. I was a financial analyst for Transwestern in their Atlanta office. So I was an analyst for office, investment sales broker, and two multifamily investment sales brokers. So I was analyzing office and multifamily. Never been an analyst before that. I was actually, my dad was a home builder, so that's kind of what initially drew me to the real estate side. And even after my MBA, I worked in the residential real estate world, but it was like the worst timing because it was like 05, 06, just before everything imploded. So then I switched back to commercial real estate. Got this job as an analyst. Never done it before. It was just kind of a natural fit. And then several years later, just wanted to make some extra money. Started doing it freelance. Realized I kind of fell into it. I mean, I just would get requests like, "Hey, can you run a model? I'll pay you $100 to run a model." I was like, "Oh, the light bulb went on. Like, I can make $100 just doing a model." So then I started doing more of it, networking through just my existing network to take on more of that work, and just was waking up super early in the morning. I had like young kids, and it was brutal. I mean, it was brutal. It worked really hard. It was, doing billable work, and then full-time role, and then trying to figure out the model to scale or to grow, which I thought it was bring in some junior analysts, have them kind of draft it and get me further along, and which we kind of do as a company. But for us at that time, it was really I brought in a guy from experience with HFF, and he could just connect with the client directly. I loved him, and that kind of light bulb went off. I realized that's the model for us, is like senior analyst working directly with the client, and the client really appreciates that kind of level of experience, and they ask good questions. And so I realized that's the model. So then we just kind of grew from there, recruited kind of that way, and now it's gotten to the point where we have 15 analysts on our team. We've got 5 designers. So we started doing graphic design to, once we do the analysis, we can drop it into like a OM, offering memorandum, pitch decks. We do design as well. So we've got 5 designers. So now we've got this basically consulting model, agency model. And it's a lot of fun because the network of people you work with, all by country. It's been pretty fun.
Yeah, who would you say your typical client is? I mean, is it sponsors, and operators? Sounds like maybe brokers too. Do you ever work with investors as well that are due diligencing a deal and want to help? They want your help with modeling, their own way or something like that. Or who would you say the people you work with?
Yeah, it's really two groups. It's the sponsor and the broker. We occasionally, I can probably count on my one hand that investors, like LP investors, asking to evaluate a deal. It's almost always the private capital sponsor doing $5, $10, $20, $25 million transaction, or more or less. But it's usually pretty lean teams that so that's on the sponsor side. And it may be a one-man the company or 2 partners. They usually don't have a full-time analyst, but they might, and they just might need to do some budgeting, or they kind of get their capacities limited, and the deal flow is kind of chunky. So sometimes, even if they have an analyst, they'll hire us. But a lot of times, they don't have an analyst. It's they're running pretty lean. And full-time analyst is pretty expensive.
Sure.
And you get somebody probably more junior. So our whole value proposition is for a lot less cost and lower fixed costs, you can get more experience. So it's usually on the sponsor side, it's lean teams, private capital, multiple asset classes. So it's just across. We just see everything. Usually in the multifamily, office, retail, a little bit of industrial, a little bit of self-storage, a little bit of hotel. But then on the broker side, kind of same, it's the same type of transaction and deal. It's just on the broker side. So it's like the Colliers, Transwesterns, Avison Young, NAI offices, independent shops that are doing, again, those larger transactions, but they run pretty lean. Their office, they don't have a lot of, they might not have a full-time analyst, or they lost their analyst. So yeah, it's those kind of private capital doing large transactions, but the teams are lean, and they need kind of an institutional or professional approach to the underwriting versus them doing it themselves, or like the most junior person on the team might be trying to do it, but they don't really want to do it because they want to be a broker, or they want to be in acquisitions. So it's like this role that it's not always like taken care of internally, that we get outsourced. But yeah, we don't get hired by like the larger CBRE, JLLs. We haven't. Occasionally, we'll help a team out, but and then like the larger, more institutional operators, owner operators, they usually have like,
In-house
teams. In-house, yeah.
That makes sense.
They don't like to outsource as much.
So what you said when you got out of business school, you took an analyst job, and what did you think you were going to be doing? Like, what it sounded like that wasn't exactly what you thought your path was going to be.
Yeah, I didn't know, man. I was in real estate before, so I was an engineering major in college, civil engineering. Thought I wanted, just do what that's when my dad was a civil engineering major. It's just amazing, and you just kind of follow. I think we have at this point, we're like 5 generation of engineering majors.
Wow.
But like my great grandfather was an inventor. So he was an engineer, and then my grandfather was a mechanical engineering major. He went into sales, and then my dad was a civil engineering major, became a home builder. So I was like, I'll just major in engineering like everybody else. So I never really knew, and I ended up in commercial real estate after college, but I didn't know if that's really what I did. So I went to business school to kind of expose myself to like different things, so I could figure out what I wanted to do. And then I ended up back in real estate because it was just kind of a fit culturally for me. So yeah, I didn't know, man. I was trying to figure it out. I think that's when I landed in that analyst role. It was such a good fit, and I really hadn't had that before. So it was I was fortunate that I kind of fell into that.
Yeah, well, as somebody who works with a lot of investors, I feel like the engineer types, they're typically the LPs that want to analyze the deals themselves and that kind of thing. They want to underwrite it themselves. They want to take the numbers that are given to them and run it through their own model, that kind of thing. So you definitely have the mindset, for that. And it sounds like it runs in your family many, many, many generations. So what was kind of the hurdles that you felt up front? Because it sounded like there was it's a learning curve, right? You know what I mean? It just takes time, and I think that's important for investors to hear. It's not like you're going to sit in front of a model and understand it overnight. You know what I mean? It's just something that takes time, right? So what was kind of walk me through that process of how and maybe even till today you're still learning. You know what I mean? I'm curious to hear that transition over the years.
Yeah, I think when you first start modeling, you think that every input or every number makes a huge difference. And you realize after you do it for, so I've been doing it since 2007. So you realize that there's only a few real kind of levers that move the needle in a model. And it depends on strategy. It depends on, is it development deal, value add? Is it core plus? It depends on the asset class. So like, in an office underwriting model, for example, capital is king. Like TIs, base building capital, those things can kill you, as well as the residual pricing, because you really only, it's like 3 or 4 things in every model that really change the model, like really make or break whether you did well or didn't do well in the investment. So it's market rent, capital. Like for example, an office, let's say value add office model. it's tenant improvement costs, it's base building capital, it's your residual pricing, and it's your market rent. It's like literally those four things or whatever I said. With a let's say a development model, that could be more dependent on timing of like how quickly you get in, get out, because it depends on what metric your investors really are focused on. Is it, if it's multiple, timing doesn't really matter. But if they're really IRR driven, then the timing, I mean, you can move a development model, as I'm sure as you know, like a few months, and then your IRR just starts to drop it. So it's like a few things in every model. It's just after you do so many models, you realize like, oh, it really doesn't matter if this expense line kind of grows 3% versus 2% or 4% versus 2.5%. Like it does impact it, but if it really doesn't it doesn't really move the needle. So I think that's the one thing I've learned every time is every time you look at a deal, it's a little bit unique, a little bit creative, but there's only a few things. It's like kind of like looking for if I pull a ball, like just because I've seen so many of them, I'm looking for like the one or two things that kind of like is sensitive. The model is sensitive to.
Yeah. Wow. That makes a lot of sense. I mean, because I would think for the novice, you're coming in thinking everything's important. You know what I mean? Everything's going to have some kind of an impact or something like that. For somebody like yourself, who's at this stage has probably done thousands of these things, I mean, it's just those few core things. You know what I mean? That are really going to make a big difference at the end of the day. That's really good insight there.
Yeah, it's really amazing how few things really move it. And we run sensitivities. Our analysts have built in sensitivities into the model, so you can see like residual cap rate. Different. You can build in different sensitivities, but sometimes you don't know which metric or which variable is really gonna move the needle on in a deal. And you also you have to know the deal too, because you might have time, like, so, for example, for a development deal, you might have execution risk on the timing of getting entitlements, getting it built. Like there might be risk factors in that timing that you're not aware of. And if you know, but if you know that the timing is really essential to your IRR, then you can know to drill down on that timing. Like how certain are we that we can deliver units by within 18 months or whatever? How certain are we? And then you have to run, knowing that, then you run a 24-month model, run a 30-month model, and just see how sensitive the IRR is to that time.
Yeah, that's a really good point. And to kind of what you're saying there as well is understanding what the deal is and kind of knowing what you want the outcome to be in some sense is going to be very important, right? I mean, so for what are kind of the, like, how do you train your analysts when they're dealing with a client? You know what I mean? Like, to what kind of questions they should be asking and things like that, and how do they get that overall understanding of just the kind of the story behind the deal, you know what I mean? Because all that's kind of like the emotional side of it, you know what I mean? And it's like taking that story of, here we're buying it, this is our business plan, and then this is the exit, and it's putting it into a very logical, model, right?
Yeah, I think we tend to rely on bring in senior analysts that have had asset class experience. So like if they're doing a multifamily model, they've worked for an operator or broker in that asset class. So they've developed some of those reps and some of the kind of intuitive thinking on what to look for. And I've also found that it's really effective with our clients to kind of iterate. So like rather than go down rabbit holes and make sure the model is perfect and polished, it's like clients almost like it better when you turn it quicker at a lower cost, but then they can tweak it and change it with the assumptions. So it's really the goal is not like a perfect model or like we know exactly what to put in the inputs. We rely on our clients for the market knowledge. the goal is really to turn something each time that's like a little bit closer to kind of what makes sense. But yeah, I mean, the cool thing about our model is like if we had to train junior analysts, like it would take too long. Like the only way they really learn is working for a sponsor or working for a broker and seeing a lot of deals from that side before they can really join our team, because it would take too long. But you're too removed to, like, you being remote. We're all remote, so you're too removed. Like, so you're sitting in Florida, your clients in California, and you're going back and forth on assumptions. Like, you're too removed from that whole process, and to really, it would take too long to kind of grow. So it really helps with when analysts are coming out of school to work for either a sponsor or a broker. Especially especially on an asset class, it really just either they're learning an area or market, or they're learning an asset class, but they're just seeing reps.
Yeah.
And from there, they can.
Yeah, you make a great point. I mean, putting the reps in. I worked for a investor, developer, broker, and it was a boutique firm that was just touching everything. From industrial to office to restaurants to strip malls and everything in between, multifamily. I mean, so just constantly every day, just putting these different numbers into models, and like that was the way I learned, just constantly doing it on an everyday basis. It's one of those things where practice is really going to make perfect to some extent. But you brought up the perfect word, which it hit a chord with me, because I think a lot of times when I'm dealing with investors and they want to see the model, and they're looking at it, and it's like, especially from a return perspective, they're thinking, okay, well, I should be making this return in this year, and this kind of cash flow or whatever. And I always have to preface, like, the models are always they're not perfect at the end of the day, right? I mean, there's things that just can't be accounted for. There's other variables and things like that. Talk to me about that, right? I mean, it's just the model is always going to have some limitations at the end of the day, right?
Yeah. Yeah. It's you're trying to predict. It's like kind of trying to predict the weather in a way. There's so many variables. There's so many things that can go wrong, right? So you're just doing a pro forma based on what you know. And a lot of times, I mean, what we really benefit from is the client knows the market and strategy usually so well, because they're not going to be able to raise equity capital unless they're really on it, and they're not going to succeed as a broker unless they really know the market. So usually our client knows the market really, really well. So it's like, yeah, we have the model, but they kind of know where the value, kind of within a range where the value is going to land anyway. Yeah. And so the model is a little bit like proving it out. We're showing kind of like the variability, like what if this happens or what if this happens, but it's really proving out there. What I found is that the broker kind of knows what it'll sell for. And then can the numbers bear that out, or the sponsor knows kind of what they pay for it, and where it kind of should be pricing wise. And then again, it's like modeling it out to prove their thinking, and also to help them to raise money, raise equity, raise debt. So a lot of times the modeling, not that it's like an afterthought, but it's kind of confirming and proving out what that market expert already knows to a degree.
Yeah, you make a really, really good point, because I think it just goes back to, especially for accredited investors who are investing with sponsors and all, it always starts with the sponsor at the end of the day. And I think it's important that, if you do your own due diligence and your underwriting, and, if you have your model, I mean, you got to do whatever you got to do to sleep at night and feel comfortable. But at the end of the day, there's just a level of trust that sponsor knows what they're doing, knows what they're talking about, and they should, if you're dealing with the right person, know the market very well. And if you're coming from an outside market somewhere else, I mean, I just don't, unless you're spending a lot of money on due diligence and working with like some kind of a research company or something like that to get data and things like that. There's just nothing better than somebody who really knows what's happening from a micro perspective, in that actual market and in the area that they're investing in, because it's just anything else you're just kind of taking guesses, and there's variables, where it's just like a new development's a perfect example. We've dealt with some new development retail, where and office too, you see it, any kind of new development, it's like the market rent might be $23 a square, but new development is going to be $43 a square. I mean, because it's just a different product, and it provides a completely different value, in the market, that kind of thing. So knowing the market, knowing all that information, that's crucial at the end of the day. And I like what you said about predicting the weather, because that's probably a pretty good way to think about it. You know what I mean? You can look at all the indicators and things like that, but sometimes when they say it's going to rain, it doesn't, right?
Yeah. But like, when you guys look at a deal, you almost know intuitively, like, okay, rent is X, and then cap rates on the back end on the exit sale are going to be, kind of X. So, and then our cost is going to be at, like, you're in your mind, you are doing a back of the envelope in a way.
Sure.
And that's where you get comfortable. And then if the model comes back with more complexity and it's confirming that back of the envelope, then now you got the back of the envelope confirming or vice versa, confirming each other. And you're seeing, knowing the more you're seeing transactions, or you kind of know other people that are kind of seeing or looking at it the same way. That just creates kind of confidence, but it's all those things kind of working together. Yeah. But really at the end of the day, it's you as sponsors kind of knowing the market, knowing where things should land.
Yeah, that's a good point. And I kind of like the imagery of it. You're taking what's in here and you're getting it out. And sometimes that's when you really flesh out, everything at the end of the day. Because you could be thinking, okay, to your point, I know what my basis is. I know what the costs are going to be. I know what the exit is. I know what rents are going to be and all. And that means something up here. But when you actually see it in paper, and then when you have to present it to an investor, to your partners, to other people in the transaction, that's when it kind of makes it real. You know what I mean? So I think that's the importance of a model, right?
Yeah, I also think, like, if you're a sponsor and the way you underwrite deals and the way you present that underwriting reflects so much on, you could be like the best sponsor in the world. If your numbers are kind of like not formatted very well in Excel, and you're like sending people Word documents with an Excel document, it doesn't look as obviously professional. It doesn't mean you can't like crush it as a sponsor, but it's just, there's a perception there of knowing the numbers, presenting them in a kind of a clean, kind of creative way that's like totally distinct, especially if you're a sponsor that's like doesn't have a huge track record, and you're going, you need co-GPs, or you need to building your reputation. I mean, the underwriting, and a lot of the younger sponsors, they might be doing the underwriting themselves, just from a cost standpoint, which is fine. But like at the end of the day, the way you present your numbers, the way you can speak to them. Yeah. And we ran, we know that timing in this development model is key. So we ran 3 different scenarios, but you're not just giving someone like a sheet of like 1,000 numbers. It's like a small table with a few numbers. Like you kind of know it so well that you can kind of speak to it, just a few different numbers. That, to me, that's gonna goes over so well when you present yourself and building your brand, because ultimately you're building a brand.
Yeah, I like what you're saying there, because it puts the model in a different perspective. There's like the utilitarian aspect of the model, where it's confirming what's in your head, and putting some sensitivity analysis to it, that kind of thing. But then there's also the presentation of it, the brand of it. There's all that side of it as well. And I think it's important, like to your point, where having it in a clear, concise way, it's like here it is. Anybody should be able to understand this to the most part. But then if you do have something a lot longer, for somebody maybe like yourself who has that engineering mind, you know what I mean? Like they would maybe want to see things a little bit deeper. It's like I love having different types of content for investors, depending on what type of investor they are. Because some of them, they want to see that that built out, you mean that long, the model where like when you open it on your computer, it takes a few minutes to open up, you know what I mean? Because it's so, intense. And then other people, they want to see that summary page, where everything's kind of buttoned up well, and it's easy to read, and you can take a screenshot of it, and it's just, and it's easy to see and understand. So I think you make a really good point there.
Yeah, you got different audiences. Some are more detail oriented. They want to have the actual model, and the more complex, almost sometimes.
Sometimes they want to see it in like an Excel. Okay, I mean something that they can go and plug and play, and change the numbers around and that kind of thing. And that's one point. And we were always, and we still are. I haven't made this shift, to myself yet, but we were always extremely conservative in our models. If we're seeing, and we can be because we're of the types of deals we do, where it's like we can see a market appreciation at 5 or 6%, that we could back up all day long with data, but we're still putting 2% in just to be ultra conservative. And to your point, it's the numbers are still good. It's not like, like we need sometimes a deal. You need to do that. You know what I mean? You need to go 5-6%. You put in 2, now your IRR, I mean, your return, it's not hitting where it needs to be. You know what I mean? So some people do that. Same thing with rents. Like our rents nowadays, 1,700 pretty much all day long, but we're putting in 1,450 because the numbers still look good. And then I had somebody tell me, like, when you send those to investors, they're going to take 20% off of your numbers anyway. So it's like if you're putting extremely conservative numbers, they're gonna back it off even more. It was funny because I've had calls where people then call me and they're like, well, I took some off of the rent, I took some off of that, and it's like, oh, I did that already. I mean, but not everybody does that. A lot of times people in models are going to that extreme, right? You know what I mean? They're like, oh, we're gonna get that 5% market appreciation on rents, and we're gonna get this much, our costs are gonna be this much and all. So they're kind of, a lot of times people are pushing those extremes, and I think that's an important thing for sponsors to try to dig into, and that's where it's really worth like maybe doing some research. I just think doing proper due diligence, it costs you money, and I mean a lot of times sponsors don't necessarily want to do that, but if you call local brokers and things like that, you know what I mean, and if you catch the right person on the right day, that's a really good opportunity to kind of maybe test some of those numbers and ask them, because I'm that kind of person where if you catch me on the right day, like, and you have questions, I'm more than happy to answer. You know what I mean? Like, so they tell me this guy's putting in, $32 a square foot, and it's like, that's $20 square foot all day long. You know what I mean? And I see that a lot, especially in the brokerage world, where it's like, I lost a listing a while back. It was for like a retail, on a good area kind of place, but had really bad access. And due diligence, I think it was like $23 a square foot, something like that. And they went with somebody else who was like, $32 a square. It was like, you're never gonna get that. And it's the property has literally been sitting there, with the for sale sign, 2 years later, that kind of thing. But it's like that's on that side of the spectrum. But an investor can do that too. If you want to do that kind of due diligence, make phone calls to local agents or maybe other investors or something like that. And you might not get an answer every time, but if you're persistent, you're going to catch somebody at the right time on the right day, or they're going to get back to you, and you can have that conversation and try to, weed out whether the numbers are right or not.
Yeah, you're right. It's a little bit of kind of elbow grease on your own. Compare that with what you're hearing, and versus just I love that investors dial back the rents that are already dialed back, just like it's like arbitrary.
So that's where it's one of those things where it's like, okay, now maybe I should put in, what the actual, what the actual rents are, you know what I mean, that kind of thing, because they're gonna dial it back, let them dial it back instead. I'm doing it and they're doing it too, but and then we're ultra conservative.
Yeah, you could have your own model with the 2%, but then send investors. But then you got 2 sets of books and biz.
People have asked me that from do you have like this sensitivity kind of thing? And we have all kinds of different models, and I have your model that you guys did, which is unbelievable. And to your point, like it has an institutional feel to it. And I think that's extremely important. And that's where you need those versions. Like, and you guys have a great summary page. And I mean, like, because that for some people that's great. Other people, like, their head would explode. You know what I mean? And I mean, if they start to get into all the tabs, and really start to look into it, I mean, from that perspective, it's just like it's going to make your head spin. But I people have asked me that before, and it's like I could send you like a zip file where it's like you could, because I think most sponsors probably don't just have one model. You know what I mean? They've changed it a million times, and yeah, so because to your point, like you could have that sensitivity and maybe in some areas, like on a cap rate or something like that. But like just going in and just changing numbers all around. You know what I mean? So it's like I always have like 10 different versions, you know what I mean? Like, and how many refis you're doing, or, how, what's the raise if it's 5 million or 10, and that's going to depend on what the deal is, that kind of thing. But, what's your take on kind of out of the box models? I think, that's something you see so much of now. You know what I mean? You go like Adventures and CRE is a very popular site. There's a million others out there where it's like you can go and you can download software, or you can download like a formatted Excel spreadsheet, things like that. I've always personally struggled with them because for what we do, I've never seen a perfect model for, not that there is one, right? But for single family like a commercial approach to single family where you're refining and adding to the portfolio over time, it's always hard to make it work. I've maybe had a little bit more luck on a more traditional multifamily deal, or a strip center, or an office, or something, building, something like that. But what's your take on those out of the box models, and compared to like what you do and all?
Yeah, that's good. That's a really good question. We have, if you were like, Val, I need a model that's like, retail development model. Do you have one? Like, yeah, we have one. We'll send it to you. We almost, we don't really sell models very often. And even when we do, we try to build in some consulting time to tweak it or explain it. But you would get my model, and then you really wouldn't know how it works. So like a lot of your time would be spent trying to figure out where the inputs are and then you probably have some questions like, well, where's the, untrended yield on cost here? Like, I can't find it. And then we'd be like, oh, we call it this. And then you're like, so there's like, yeah, I agree with you. It might give you some ideas on some ways to do things. It could give you a starting point to then customize it. It adds value, but yeah, it's not like you're saying, it's not like off the shelf where like, hey, all of a sudden I got this awesome model. It took me like 2 minutes to download, and now I'm going.
Just plug and play, right? It's just not that kind of a business, right?
It's not that kind of business because you got to customize it to what you're doing. Like you're saying, you couldn't buy an off the shelf model that does, like you're saying, the portfolio where you acquire a portfolio. And there's always so much uniqueness to it, and also knowing your model. Like we have clients that want to. We tell them like you can keep your model and we'll just like improve it, or we can you can use ours if you don't like your model. So sometimes it's a blend. But like knowing your model, like even if you have a model that's not perfect, you kind of know where the everything is. And I'm not like, where things, so like maybe we can improve it. So like, let's say you have a model you don't love, but you know where to find, the unlevered IRR. And you just there's parts of it you probably like. There's like any model you have, there's parts of it you like, or parts of it you built. Maybe you've added to it over time and it's become kind of a mess and the inputs are all over. So let's say we took your model, not your model, but like your model's probably awesome, but like we would take a client's model that's been doing it themselves. They don't really have a lot of time to maintain that model and make it like clean, and we'd make sure all the inputs are like in one tab, and then we kind of maybe automate some of the functionality of the model so that they're not hard coding things. So little things like that, like best practices. But yeah, like so much of it is knowing where you input things and how it comes in. It's like, and then after you've used it a few times, now you're getting better and better every time you use that same model. But yeah, like just downloading a model and it can serve a purpose for sure. and it can be useful, especially if you don't know, you have nothing to start with. But then even when you're downloading something, I would think you're going to customize it over time, and then is it something that can be like scalable? Like if you download something, can you then easily add on to, refi function, or can you build in what the cash flows and how, so it's all kinds of things like that.
Yeah. Which you need to be somewhat of an Excel wizard in order, because the formulas, I mean, that's always the problem I run into, is it's just the formulas can be, there's different ways of getting to the same end game kind of sometimes in Excel, right? You know what I mean? So it's like how people got there. And then when you're dealing with different tabs, like a lot of different tabs, and they're all kind of running through each other in different ways. And I mean, it's just, it's a real challenge, and you're gonna run into that dreaded, the formula's not adding up thing. You know what I mean? It's like, oh God, that's painful.
Yeah, and like the formulas, and if you're not in it, every day. I mean, I've gotten to the point where like I don't even want to, like I wouldn't even do a model on my own. I would loop in one of our analysts, because they're just in it every day. They're better. They've gotten better than me at doing it, and like, yeah, they're saying the formulas, they'll have like these better formulas than me in terms of like you're doing a monthly cash flow, or you're all kinds of different complex formulas that make it easier. So if you're a developer or sponsor on, you have some Excel, usually people have some Excel experience, and they might start modeling on their own or building a model. Well, you can tell. I mean, it's literally like, it's like me doing like a home improvement project. It's like, it's so much work, and like, it just doesn't look great. Yeah. Versus guys that are in it every day, and they can whip it out in like an hour, and it looks good. It's clean. It's just, there's so much utility to doing something, and day in, day out, versus the DIY, do it yourself.
Yeah.
Like, for example, like a development model, has that circular kind of reasoning. So like you're doing, your cost sheet includes debt costs, but your debt cost is based on the cost sheet. So how do you handle that circular calculation? Just things like that, just, really can slow you down if you're not in it every day, and kind of have a system for that.
Yeah, I think you make a really good point there, and it probably a comparison that some people, a lot of people could relate to. It's like when you try to fix the shed yourself, or you try to fix the toilet yourself or something like that, and you spend a lot more time than maybe you should have, and then it's broke the next day again or something like that. Whereas if you're working with somebody, it's just it could be done a lot quicker, and it just comes back to like, what's your values, what's your skill set at the end of the day, and where's your time best spent?
Yeah, where's your time? You might be trying to save time, which makes sense. We all do that, but there's a point where you it really benefits to bring in a guy that you don't even realize how much more efficient these guys can be than, I mean, even becoming like even me now, where I'm like, if I'm trying to model something, it's just like, it's slower. But yeah.
You make a really good point. I mean, putting your reps in, because that's something I've heard. That's a piece of advice that I've heard in so many different aspects of the business. Like from a brokerage perspective, if you're bird dogging, if you're looking for deals, I mean, it's all about every day making phone calls, getting in front of people, just hitting the phones and talking to people, driving around, that kind of thing. So that's putting the reps in there. From a construction standpoint, this is a big question that always comes up is how do you know your cost at the end of the day? I mean, when you go to a property, whether it's a single family property, multifamily property, you walk through, how do you know what it's going to cost to renovate that property? How do you know what needs to be renovated? I think that's one of the biggest things with value adds, you know what I mean? Where it's just like, what do you have to do? What do you not have to do? What's going to be the best bang for the buck? If you don't fix it, it's going to be broken 2 months from now, and you're going to be back, wasting time. So just the kind of figuring and doing the reps, reps on the construction side and the cost rent and estimates and things like that. And it's just there's so many different aspects of the business. I mean, same thing with like dealing with tenants or dealing with investors. Nobody's going to be perfect the first time when they have that when they do it. I mean, so it's putting those reps in day after day after day. I could picture like a really good because like that was like I was saying that was how I did it. It's like just going in every day. Like if there was a boot camp out there where people could be sent a deal or multiple deals every day, because that's like the only way you could kind of replicate, to your point, if you're working with a sponsor or you're working with a broker, like you're going to be getting that stuff on a day in, day out basis. And that's how you're going to learn, and two, to be surrounded by somebody who's put the reps in for many years before you, who's going to help you to be able to see where you're running into walls, where you're getting things wrong, all that kind of stuff.
Yeah, totally. Yeah.
It's a business idea, Val. You can you have a boot camp and just be sending out deals all for a 12-week period of time, just deal a day, and that kind of thing. I think. But to your point, it's like when the thing is over, if you don't continue it, chances are it's going to be it's like riding a bike, but but it's a little bit different in the sense that you might not be able to pick it up so easily.
Right. That's a good point. And it's so specific to asset class as well. So like you're saying, when you started out, you got exposure to different asset classes, which is awesome. It's almost like learning different languages helps you understand each language. Yeah. Versus like being pigeonholed. But being pigeonholed can be good too, because you become super good, especially if it's like a major asset class. Like if multifamily super well, that's like really valuable. Office is probably more out of favor, but people are looking at office now on the acquisition side. So yeah, the boot camp idea, we've got we call it DA Academy. We've got like coursework we've been kind of building out, but we just don't have a ton of time to put into it. There's probably a business idea there at some point, but we're really focused on really kind of a traditional consulting model. So it's like when you're working with a client, like you're saying, like we have clients come to us, they want to buy a model, or they bought a model and they're trying to figure like there's a consulting aspect to it where we have to like get on screen share with you, look at what you're doing, show us and talk through it, and then figure out the unique aspect of what you need, and just be creative that way.
Yeah. No, that's awesome. And I think there's a lot for an investor standpoint, knowing everything that we've been talking about. I mean, that's going to help you to ask really good questions to sponsors and how they went about creating models and things like that. How would you say things have changed over the years? Because I see some of the old guys in this business where it's like they can do all this stuff in their head. To your point, you know what I mean? It's just like they can, and then it's the T98 or what's the calculator? You know what I mean? They can do everything on
the HP 12C or the TI 85. Yeah. Okay. HP 12C. Yeah. I knew a guy earlier in my career, not that long ago, but he could do like complex things on his HP 12C, like, and it was the I don't know what they call it, but it's not like 2 + 2 = 4. It was like 2 enter 2 enter plus. And it gives you, it's like the language.
I did a little bit. I took a course
thing, man.
Oh my God. I took a course that involved that, and it was like, man, the learning curve on that, you know what I mean? But if you're good at it, that thing is powerful. And I remember my dad knew it well, you know what I mean? Because that's just what you had to do back in the day. And it's just like, they should teach you that in school. That's one of those things, they don't teach that they should teach you, because that is a powerful little machine right there.
Yeah, I feel like you were saying like the how it's kind of progressed. I don't like. I think it always boils down to like the same. It's okay. I think it always boils down to like a few metrics, and the more you do it, the more you realize like you can do it like back of the envelope, typically. But like you're saying, you have to know like construction costs. Like you have to know the construction costs, you have to have the reps and know the market, know the building enough, know the construction side enough to like really dial in those costs within a kind of a reasonable frame. But if you know the costs and you have a gut feel for the market on the exit, like it all boils down to those few things. So like whether you're doing it on you could do it everything on your HP 12C, or you can have a complex financial model, and they're kind of telling you the same thing in a way, but the benefit of doing the financial model is it kind of confirms it a little bit better. You run it, you're able to test a few different variables better, and you're communicating to your LP investors better what the risks are, and you're also able to present yourself as kind of more professional, and also it helps everyone just kind of understand the deal in terms of the risks and the potential for rewards.
Yeah, I love that. I mean, it creates a visual that, that if you don't have it, it's just that you're missing something. So I think that was one of the great takeaways from this conversation. It's like there's that that utilitarian purpose, like here's, to get everything in here out. But then just also have that the presentation piece, in order to share that and to get what's up here out and into paper, or out and into a computer, into a program, where you can send to people. That's very powerful. Val, this has been an amazing conversation. This is just it's such an important topic within the space. And I mean, it's one of those foundational kind of pillars that you need to have down, and if you're not, and it's one of those things where it's a hat you could wear yourself, but to your point, you really got to be putting the reps in day after day after day, and practice makes perfect in this sense. So I think it's in a lot of ways, depending on what kind of person you are and what you specialize in. I mean, working with somebody like you is just the way to do it. So if people want to work with you, they want to learn more about you and your business and all, how would they get in touch with you?
This way is just email me, first name, last name, Val.Despard at despardanalytics.com. That's the best way to reach out to me. Obviously our website, despardanalytics.com. I'm all over LinkedIn too, so just search for me, Val Despard. We can connect there. So yeah, that's the best way.
Great. And we'll put links in the show notes and all that kind of stuff. Val, I really appreciate your time today. Enjoyed the conversation. Really great insight.
Likewise. Yeah, thanks for having me on.
Thank you.